stop scrolling right now, because what I'm about to tell you is going to change how you see the entire economy. And I'm not exaggerating. By the end of this video, you'll understand why a crisis is building right under our noses, why almost nobody's talking about it, and why when this breaks, it's going to shake the foundation of modern civilization itself. Look at your phone for a second. The device in your hand, the computer screen you're staring at, the lights in your room, the car you drive, the refrigerator keeping your food cold, the air conditioning keeping you comfortable, everything around you, everything that makes your life modern and comfortable, depends on one single material. And no, I'm not talking about oil. I'm not talking about gold. I'm not even talking about copper or lithium or any of the materials you hear about in the news. I'm talking about silver. And here's what most people don't realize yet. If silver supply disappears, modern life doesn't just slow down. It stops completely. No backup plan, no alternative. Just stops. Now, before we dive deeper into this, I need you to do something. If you want to understand the real forces shaping money, power, and resources, if you want information that goes beyond the surface level news everyone else is feeding you, hit that subscribe button right now. Seriously. Subscribe to Dark Economy, because what you're about to hear isn't discussed anywhere else. The mainstream media won't tell you this. Financial advisors don't talk about it. And by the time this becomes obvious to everyone, by the time CNBC and Bloomberg start covering it, it'll already be too late for most people. So subscribe now, smash that notification bell, and let's dive into something that's going to blow your mind. Here's the thing. For thousands of years, silver was money, pure and simple. Ancient civilizations built their economies on it. Empires rose and fell based on their silver reserves. Wars were fought to control silver mines. The Spanish Empire conquered half the world chasing silver. They crossed oceans. They destroyed civilizations, all for silver. The Roman denarius was silver. Chinese dynasties used silver as the foundation of trade for centuries. For most of human history, when you said money, you meant silver. Gold was for kings and emperors. Silver was for everyone else. It was the people's money. But something changed in the last 100 years. Something fundamental. Silver stopped being just money. It transformed into something even more critical. It became the invisible backbone of every piece of technology you use every single day. And here's why that matters more than you think. Why it matters more than almost anything else happening in the economy right now. Silver is the best electrical conductor on planet Earth. Not one of the best. The absolute best. Better than copper. Better than gold. Better than platinum. Better than anything else we've discovered. This isn't marketing hype. This isn't someone's opinion or preference. This is pure physics. This is the laws of nature. When electricity needs to move with maximum speed and absolute precision, when there's no room for error, when performance is literally life or death, silver is what engineers choose. Every single time, without exception. Think about your smartphone for a moment. Really think about it. Inside that device are dozens of tiny components with microscopic amounts of silver, connections between chips, contacts and buttons, components in the touchscreen. Without silver, your phone would be slower, less reliable, more prone to overheating and failure. Data centers that run the internet, that store your photos and emails and everything you do online, packed with silver connections. Satellites orbiting Earth right now, the ones that give you GPS and satellite TV and global communications, silver components keeping them functional in the extreme environment of space. Medical equipment in hospitals, the machines that keep people alive during surgery, silver connections ensuring absolute accuracy when lives are on the line, solar panels converting sunlight to electricity, silver conducting that power with maximum efficiency, because even a small loss of efficiency means massive losses when scaled across an entire solar farm. And here's the part that should terrify you, the part that keeps me up at night. We are electrifying the entire planet simultaneously, right now, all at once. This isn't happening gradually over generations. This is happening in the span of a single decade. Think about what's happening around you right now. Electric vehicles are replacing gas cars, not slowly, rapidly. Governments are mandating it. Car companies are investing hundreds of billions into electric vehicle production. Every single electric car needs significantly more silver than a traditional vehicle. We're talking about triple or quadruple the amount. Multiply that by millions of vehicles per year. Artificial intelligence is exploding. ChatGPT, AI image generators, AI video creators. All of this requires massive data centers. Buildings the size of football fields filled with servers and cooling systems and power infrastructure. Each data center needs tons of silver in its infrastructure. And we're just at the beginning of the AI revolution. 5G networks are rolling out globally. Every 5G tower needs more complex electronics than 4G, more silver. Every 5G phone needs upgraded components, more silver. Multiply that by billions of phones worldwide. Massive solar farms covering thousands of acres are being built across deserts and plains. Each panel requires silver to function. There's no alternative that works as well. Wind farms need silver in their control systems and generators. The entire renewable energy transition that governments are pushing, it all runs on silver. The smart grid they're building to manage all this electricity, silver connections ensuring reliability. This isn't gradual change. This is a tsunami of demand hitting all at once. And here's the critical point. It's not optional demand. It's not like fashion where people can choose to buy less clothing if prices rise. It's not like luxury goods where higher prices kill demand. This is something economists call inelastic demand. And you absolutely need to understand what that means because it's the key to everything. Inelastic demand means that price doesn't control usage. Let me say that again because it's so important. Price doesn't control usage. The normal rules of supply and demand don't apply. If silver triples in price tomorrow, Apple doesn't stop making iPhones. They can't. Their entire business model depends on selling phones. If silver goes to $300 an ounce, the military doesn't stop building defense systems and missiles and radar systems. They won't. National security depends on it. If silver hits $500, hospitals don't stop buying medical equipment. They can't. People's lives depend on that equipment. Why? Because silver represents a tiny fraction of the final product cost. But without it, the entire product fails. It's worthless. A phone costs $800 or $1,000. The silver inside? Maybe $1 or $2. So even if silver prices multiply by 10 times, it only adds $10 or $20 to the phone cost. Apple will pay it. They have no choice. The same logic applies across every industry using silver. Silver is like salt in cooking. You only need a small amount. But without it, everything is ruined. The meal fails completely. You can't substitute something else and get the same result. Sure, you could use a different seasoning, but it won't taste the same. It won't work the same way. That's silver in modern technology. Tiny amounts in each product. Absolutely critical to function. No real substitute that works as well without serious compromises. Now here's where the story gets really dark. Here's where the nightmare scenario starts to unfold. Most people, when they hear that demand is rising, they assume supply will rise too. That's how normal markets work, right? If people want more cars, factories make more cars. They build new assembly lines. They hire more workers. If people want more phones, companies manufacture more phones. They increase production. Simple supply and demand. When demand goes up, supply follows. Prices might rise temporarily, but then more supply comes to market and things balance out. But silver doesn't work that way. Mining doesn't work that way. And this is where people make a fatal mistake in their thinking. You cannot print silver like you print money. A government can't just decide to create more silver because the economy needs it. You cannot manufacture it in a factory like you manufacture phones or cars. You cannot create it out of thin air. You can't synthesize it in a laboratory. You have to find it in the ground. You have to dig it up. And here's the brutal problem. We already found all the easy silver decades ago, the shallow deposits that were close to the surface, the high-grade ores where every ton of rock contained significant silver. The simple-to-access mines in stable countries with good infrastructure. They're gone, depleted, finished, mined out. But here's something even more shocking that most people have no idea about. Something that changes everything about how silver supply works. Over 70% of all silver production worldwide comes as a byproduct. Read that again. 70%. That's not a small percentage. That's the vast majority. That means most silver isn't even mined from silver mines. Think about that for a second. It's mined from copper mines, lead mines, zinc mines, gold mines. Silver just happens to be mixed in with those other metals. It's recovered as a secondary product, an afterthought, a bonus. Do you understand what this means? Do you grasp the implications? When silver prices rise, supply doesn't automatically respond the way it would in a normal market. Because the miners don't actually care about silver prices. They care about copper prices. They care about zinc prices. They're mining those primary metals. That's their business. That's what they're focused on. Silver is just bonus revenue. Nice to have, but not the main driver of their decisions. So here's the nightmare scenario. If copper demand slows down, if copper prices drop because maybe construction slows or manufacturing decreases, those copper mines reduce production or shut down completely. The economics don't work anymore. And when that happens, silver supply drops too, even if silver demand is exploding, even if silver prices are skyrocketing, even if industries are desperate for more silver. Supply doesn't respond because the economics are tied to different metals. The decision to mine or not mine isn't based on silver at all. This is why silver supply is fundamentally broken by design. The market mechanism that normally balances supply and demand, the invisible hand that Adam Smith talked about, it doesn't function properly for silver. High prices should signal miners to produce more, but they can't. They're not mining silver primarily. They're mining something else. And primary silver mines, the ones that actually mine silver as the main product, the ones that would respond to silver prices, they're disappearing, closing down, becoming unprofitable, going bankrupt. Let me tell you what's happening underground right now, what's happening that most people never see or think about. Ore grades are collapsing. This is a geological fact. 20 years ago, miners could extract 3 times as much silver from the same amount of rock. They'd dig up a ton of ore and get 60 ounces of silver. Today, they dig up a ton of ore and get 20 ounces. Same amount of work, same amount of energy, same amount of equipment and labor. 1/3 the silver. So what do they have to do? They have to dig up 3 times as much rock to get the same amount of silver. That means 3 times the energy, 3 times the equipment usage, 3 times the labor, 3 times the environmental impact, 3 times everything. And it's getting worse every year. Mining costs increase every single year. Energy costs rise every year. Diesel fuel for the trucks costs more. Electricity for processing costs more. Labor costs climb because workers demand higher wages to keep up with inflation. Equipment gets more expensive because manufacturing costs are rising globally. Environmental regulations tighten year after year, adding compliance costs. Permitting takes longer and costs more. Community relations and social license to operate becomes more complex and expensive. And the easy deposits, the ones close to the surface, the ones in stable countries with good infrastructure, gone, finished. Now miners have to go deeper, thousands of feet underground in some cases. They have to process lower grade ores, which means handling more waste rock for every ounce of silver. They have to work in more difficult conditions, in remote locations where there are no roads or power or water, at higher elevations where equipment doesn't work as well and workers struggle with altitude, in politically unstable regions where there's risk of nationalization or revolution or civil unrest, in countries with weak rule of law where contracts might not be honored. Every single factor makes production more expensive and more difficult and more risky, so supply is quietly shrinking while demand is loudly accelerating. Production is barely growing while consumption is exploding. And there's one more piece of this puzzle that almost nobody talks about. One more factor that makes this situation truly unprecedented. One more element that separates silver from almost every other commodity. Consumption. Gold is different from silver in one absolutely critical way that changes everything. Gold is mostly stored. When you buy gold jewelry, that gold still exists. When you buy gold bars or gold coins, that gold sits somewhere. It sits in vaults at banks. It sits in safe deposit boxes. It sits in jewelry boxes at home, but it exists. It's not destroyed. It's not consumed. It can be melted down and reused whenever someone wants. Gold gets recycled efficiently. About 95% of all the gold ever mined in human history still exists in some recoverable form today. We can account for it. We know roughly where it is. Silver is completely different. Fundamentally, structurally different. Silver isn't just stored. It's used, consumed, destroyed in a functional sense, scattered to the point where it can never be recovered economically. Think about this carefully because it's shocking when you really understand it. Humanity has mined roughly 60 billion ounces of silver throughout all of history. That's every ounce ever pulled from the ground over thousands of years of mining. But today, only about 5 billion ounces are identifiable. Only 5 billion can be accounted for in bars, coins, jewelry, and accessible forms. Only 5 billion ounces that we can point to and say, yes, that silver exists in a form where we could use it again if needed. Where did the other 55 billion ounces go? That's 55 billion ounces. 90% of all the silver ever mined. Where is it? It didn't vanish into thin air. It didn't disappear from existence. It was consumed, used up, scattered into forms where recovery is impossible or economically insane. Photography destroyed billions of ounces in the 20th century. Every photo printed on film used silver. The light-sensitive silver compounds on film captured images. When digital photography replaced film in the early 2000s, people thought silver demand would drop dramatically. But electronics consumption more than replaced it, way more than replaced it. Today's electronics use microscopic amounts of silver, amounts so small they're measured in milligrams, a fraction of a gram. But multiply those tiny amounts by billions of devices and you get massive consumption. When your phone breaks, when it becomes obsolete after 2 or 3 years, when you throw it away or recycle it, what happens to that silver? It goes to a landfill or an electronics recycling facility. It's still there physically. The atoms exist, but it's mixed with plastics, glass, copper, aluminum, rare earth elements, and dozens of other materials. Separating it out, recovering those few milligrams of silver, costs more than the silver is worth. Way more. So it doesn't happen. It sits there, lost forever in practical economic terms. Solar panels are even worse. Each panel contains silver in the conductors that collect electricity from the photovoltaic cells, but solar panels are designed to last 25 or 30 years. They're installed on roofs or in fields and left there for decades. That silver is locked away. It's not available. It's not in circulation. And when panels finally reach end of life, when they stop working efficiently after 3 decades, recycling them is expensive and complicated. You have to collect them, transport them, disassemble them, separate materials. The economics often don't work. Most end up in landfills. The silver is gone, locked away for generations. Electric vehicle batteries contain silver in their electronics and control systems. Those batteries last 10 or 15 years. Then they're recycled for lithium and cobalt because those are valuable. But the small amounts of silver scattered throughout the electronics? Not worth recovering. LED lights contain tiny amounts of silver. They last for years or decades. Then they're thrown away. The silver is lost. Medical equipment contains silver for its antimicrobial properties and electrical properties. That equipment lasts for years. Eventually it's disposed of. Silver gone. People talk about recycling like it's a magic solution that will save us from supply constraints. It's not. It sounds good. It makes intuitive sense. We should recycle valuable materials. But recycling only works economically when it's profitable, when the value recovered exceeds the cost of recovery. Right now, for most silver applications, it costs more to recycle than the recovered silver is worth. The labor costs more, the equipment costs more, the energy costs more. The total cost exceeds the value, which means it doesn't happen on a large scale. The economics don't work, so silver continues being consumed, used up, scattered beyond recovery. And governments? Let me tell you what governments did with silver. Let me tell you about one of the biggest policy mistakes in modern history. The United States government once held massive strategic reserves, billions of ounces of silver, the largest stockpile in the world. It was held at the Treasury. It backed currency. It provided security. And then, starting in the 1960s and continuing through the 1990s, they sold it all. Every last ounce. The strategic stockpile is empty. Zero. Nothing left. They sold it when silver was cheap, when it was $5 an ounce or $10 an ounce, thinking it was just another commodity, thinking industrial demand would stay low, thinking there was no strategic value. They were catastrophically wrong. Why did they sell? To balance budgets, to fund programs. Because Keynesian economists told them precious metals were barbarous relics with no place in modern finance. Because they believed fiat currency was all they needed. Because they thought they could print their way to prosperity forever. They couldn't have been more wrong. Meanwhile, what's China doing? China is doing the exact opposite. China imports silver aggressively, massive amounts, year after year. And they don't sell it. They keep it. They accumulate it. They stockpile it. They don't report exact numbers. They don't publicize their reserves. They don't tell the world how much they have. But we know from import data that they're accumulating. We know from export data that silver goes into China and doesn't come out. We know they understand something Western governments missed. Silver isn't just an industrial metal. It's strategic. It's critical infrastructure. It's necessary for technology. It's necessary for defense. It's necessary for energy independence. And it might be necessary as monetary insurance when the debt-based system collapses. Look at what's happening in Western exchanges right now. Public inventories are collapsing. COMEX warehouses in New York, the biggest silver exchange in the world, are seeing their stocks drained. London vaults are seeing massive withdrawals. Physical metal is leaving the paper markets. It's moving out of registered inventory where it backs paper contracts. It's moving into private hands, into vaults in Asia, into storage facilities in Switzerland and Singapore, into places we can't track, into allocated accounts where the metal is owned by specific people and can't be lent or used for anything else. Why? Because smart money, the people who actually understand markets, the big institutional investors and family offices and sovereign wealth funds, they see something everyone else is missing. They see that silver is disappearing faster than it can be replaced. They see that physical silver is being pulled out of circulation while demand accelerates. They see that the paper market is a house of cards. They see that there are way more claims on silver than actual physical silver exists. And they want to make sure they own the real thing before everyone else figures it out. And here's what makes this explosive, what makes this a powder keg waiting for a spark. The silver market is tiny, microscopically small compared to other markets. The entire global silver market, all the silver available for investment, all the bars and coins in the world, is worth maybe $30 or $40 billion. That's it. That's the entire investment market. The bond market is measured in hundreds of trillions. The stock market is measured in hundreds of trillions. The real estate market is measured in hundreds of trillions. Silver? 40 billion. It's nothing. It's smaller than the market cap of many individual companies. It's smaller than some hedge funds. It's a rounding error in global finance. This creates an incredibly dangerous situation. So when a market is this small, it doesn't take much money to move prices dramatically. A relatively small amount of capital flowing in can cause massive price swings. If just 1% of global investment capital decided to move into physical silver, there isn't enough silver available to satisfy that demand. Not even close. The market would lock up completely. And when prices start moving in a small market, when momentum builds, there's no exit. There's not enough physical metal for everyone who wants to sell to actually find buyers. The market can seize up, liquidity can disappear, prices can gap violently. But there's one more layer to this story, One more critical piece that ties everything together and makes this not just about industrial metals, but about the entire structure of our financial system, money itself. For most of history, for thousands of years, silver was everyday money. Common people's money. Gold was for kings and kingdoms. Gold was for storing large amounts of wealth. Gold was what empires used to settle trade balances, but silver was what regular people used for daily transactions. It was real money that normal people held and used. It had intrinsic value. It couldn't be printed. It couldn't be debased easily. It was honest money. That changed in the 20th century. Governments centralized power and removed silver from currency systems. They wanted control. They wanted flexibility. They wanted the ability to print money without limits. You can't do that with silver coins. The silver has value. People can melt the coins if the face value falls below the metal value. So governments eliminated silver from circulation. The United States removed silver from dimes and quarters in 1965. They replaced real money with copper and nickel slugs, with paper promises backed by nothing, with digits on screens that can be created infinitely. Since then, silver has been priced as an industrial commodity, just another metal. Not money, just a material used in manufacturing. The monetary premium disappeared. Silver traded like copper or aluminum, based purely on industrial supply and demand. But something is happening now that's going to change everything. Something that's going to restore silver's role as money, whether governments like it or not. The global debt system is breaking down. Governments worldwide have borrowed amounts they cannot possibly repay. Not with real economic growth, not with taxation. The numbers are too big. The debt is too massive. The United States government has $36 trillion in debt and growing by trillions every year. Japan has debt over 250% of GDP. European countries are drowning in debt. China has massive hidden debt in local governments and state-owned enterprises. Emerging markets have dollar-denominated debt they can't service if their currencies weaken. So what's the only option left? What's the only path forward for governments that can't repay their debts? Inflation. Print more money. Devalue the currency, make the debt smaller in real terms by making the money worth less. It's the oldest trick in the history of government finance. When you owe money you can't repay, you devalue the currency you borrowed in, you make each dollar worth less, so your nominal debt stays the same but represents less real value. It's the only way out, and it's happening right now, everywhere, simultaneously. The Federal Reserve is printing, the European Central Bank is printing. The Bank of Japan has been printing for decades. Every major central bank is trapped in the same situation. When currencies lose trust, when people realize their money is being systematically devalued, when inflation becomes undeniable, they look for protection. They look for ways to preserve their purchasing power. They look for hard assets, things that can't be printed, things that have real value, things that have held value for thousands of years. Gold becomes the obvious first choice. Gold has been money for 5,000 years. Everyone knows gold. But gold is expensive now. Gold prices have already risen dramatically. For regular people, for average families, buying significant amounts of gold is out of reach. A single ounce costs over $2,000. To buy enough gold to protect meaningful wealth requires tens of thousands of dollars that most people don't have sitting around. Silver remains accessible. Silver is still affordable for average investors. You can buy an ounce of silver for $25 or $30. Regular people can afford that. They can buy 10 ounces, 20 ounces, 50 ounces. They can accumulate meaningful amounts. And this is why silver historically explodes late in monetary cycles. When the currency crisis becomes obvious to everyone, when inflation is undeniable, when trust in government and central banks collapses, people flood into silver. Not just sophisticated investors, not just the wealthy, regular people, working families, people trying to preserve their savings, their purchasing power, the fruits of their labor. We've seen this pattern repeat throughout history. In Weimar Germany, during hyperinflation, people spent their worthless paper money on anything real, any hard asset. In Zimbabwe, when the currency collapsed, people used silver and gold instead. In Argentina, during crises, people converted pesos to dollars and precious metals. In Venezuela right now, people are using anything but the worthless bolivar. The pattern is clear and consistent. When fiat currencies fail, when trust disappears, people return to real money, to gold and silver. The gold-to-silver ratio right now makes absolutely no sense by any standard you examine it by. Geology suggests one relationship. Throughout Earth's crust, silver is about 15 times more abundant than gold. The ratio should reflect that scarcity relationship at least loosely. History shows another relationship. For centuries, the ratio between gold and silver prices stayed relatively stable between 15 to 1 and 20 to 1. That's what it was in ancient Rome. That's what it was in medieval Europe. That's what it was in the American West. But today's market shows something completely different. The ratio is stretched to extremes. Gold is 80 or 90 times the price of silver. That's not normal. That's not sustainable. That's distortion. When this distortion corrects, and it will correct because all market distortions eventually correct, it doesn't happen slowly. It doesn't gradually adjust over years or decades. It snaps back violently. Silver prices can double in weeks. They can triple in months. We've seen it before. We have historical precedent. In the late 1970s and early 1980s, silver went from around $5 an ounce to $50 an ounce in a matter of months. That's a 10 times move. 1,000% gain in less than a year. People who owned silver early made life-changing returns. Could it happen again? Look at the setup. Look at the fundamentals. Demand is higher now than it was in 1980. Way higher. Industrial demand is massive and growing exponentially. Investment demand is building. Supply is tighter now than it was then. Above-ground stockpiles are smaller. Government reserves are gone. There's no seller of last resort anymore. Monetary conditions are worse. Debt levels are astronomically higher. Currency debasement is more aggressive than ever in history. Everything's pointing in the same direction. Every indicator is flashing red. And here's what people don't understand about silver price movements. Because the market is so small, because physical supply is limited, because industrial demand is inelastic, when silver starts moving, it moves violently. There's no gradual climb, no steady, predictable increase. It gaps up, it explodes. Price discovery breaks down completely because there's not enough physical metal to satisfy demand at any reasonable price. Imagine what happens when large institutional investors decide to allocate just 1 or 2% of their portfolios to physical silver. Just 1%. These are funds managing billions or tens of billions of dollars. 1% is hundreds of millions or billions of dollars. Where does that physical silver come from? It doesn't exist. Imagine what happens when pension funds, the big retirement funds managing trillions of dollars, decide silver is a strategic hedge they need. Imagine what happens when sovereign wealth funds in the Middle East or Asia decide to diversify out of dollars and euros into hard assets. Imagine what happens when even a small percentage of retail investors, regular people, decide they want to own silver as insurance against monetary chaos. There isn't enough physical silver available to satisfy that demand. Not at current prices. Not even close. Not remotely close. The market would lock up. Premiums would explode. The difference between paper price and physical price would blow out to unprecedented levels. Delivery times would extend to months or years. And prices would have to rise dramatically, violently, to ration the available supply, to force some buyers out of the market, to reduce demand to match the limited supply. This isn't speculation. This isn't guessing. This is mathematics. This is supply and demand at its most basic fundamental level. And every single indicator is flashing red. Every fundamental factor is pointing toward a massive repricing event. Not next week, necessarily. Not next month. But inevitably. This is like watching a dam with cracks forming. You can see the pressure building. You can see the structure weakening. You know it's going to break. You just don't know exactly when. So let me ask you the real question. The question you need to sit with. What happens when a metal essential to modern civilization, absolutely essential with no real substitutes that work as well, impossible to mine faster due to fundamental geological constraints, impossible to recycle economically at current prices, collides head-on with a collapsing monetary system? What happens when industrial demand that cannot be reduced meets investment demand from people fleeing currency debasement, all in a market that's too small to handle either one, let alone both? You don't get stability, you don't get gradual change, you don't get a smooth adjustment, you get repricing, violent, dramatic, shocking, life-changing repricing. And the people who understand this now, who see what's building, who position themselves before it becomes obvious to everyone, they're going to do extraordinarily well. The people who wait until everyone knows, until it's being discussed on CNBC and Bloomberg, until your neighbor's talking about it, they'll be paying 5 or 10 times more for the same metal. They'll have missed the move. This is about understanding reality before the crowd does. This is about seeing what's actually happening beneath the surface, while everyone else is distracted by political noise and entertainment and whatever crisis dominates today's news cycle. And that's exactly what we do here at Dark Economy. We show you the real forces shaping the economy, the factors that actually matter, the trends that will define the next decade, the information you need to protect yourself and potentially prosper while others struggle. If this video changed how you see silver, if it changed how you see the economy and money itself, I need you to do something right now. Multiple things, actually. First, leave a comment below and tell me what surprised you most. What part of this story shocked you? What piece of information was completely new? What clicked for you? I read every single comment, and I genuinely want to hear your thoughts. I want to know what resonated. Second, hit that like button. Smash it. Because here's the reality. This video is going to make some people uncomfortable. It's going to challenge what they believe about markets and money and the stability of the system. Which means YouTube might not show it to many people. The algorithm might suppress it or bury it, so I need your help. That like button tells YouTube this content is valuable, that people want to see it, that it deserves to be shown to more people. Third, share this video. Send it to someone who needs to hear this information. A friend interested in economics, a family member concerned about their savings, someone who wants to understand what's really happening. Post it on social media. Email the link. Text it to people. Help spread information that actually matters in a world of noise and distraction. Because here's what I know for certain. Most people are completely unprepared for what's coming. They think the system will continue forever as it is. They think governments will manage everything smoothly. They think there's no risk to just keeping money in the bank and hoping for the best. They think their retirement accounts will grow steadily. They think everything will work out fine because it always has. And they're dangerously wrong. Catastrophically wrong. The age of cheap silver is ending. The era of unlimited supply, meeting all demand, is over. The assumption that resources are infinite and always available at reasonable prices is crashing into the hard reality that they're not. And history is quietly resetting their relationship between real money and paper money, between hard assets and financial assets, between things you can hold in your hand and things that only exist as numbers on screens. When this reset completes, when the dust settles, when the new equilibrium is established, the world will look very different. Wealth will have transferred massively. Power will have shifted. Winners and losers will be determined. And the people who understood what was happening, who positioned themselves appropriately, will be on the right side of that transfer. The people who ignored the warning signs, who dismissed this as conspiracy theory or doom porn, will be wondering what happened and why nobody told them. So ask yourself honestly, do you want to be someone who saw it coming, or someone who wishes they'd paid attention? Do you want to be positioned for what's next, or caught off guard when change arrives suddenly? Do you want to protect what you've worked for, or risk losing it in a monetary reset? Subscribe to Dark Economy right now if you haven't already. Hit that subscribe button and turn on notifications so you don't miss the next video. Because this silver crisis is just one piece of a much larger puzzle. Just one thread in a bigger story about money, power, the reshaping of the global economy, and the transfer of wealth happening right now beneath the surface. And we're going to explore all of it together. We're going to connect the dots. We're going to show you what's really happening while everyone else is watching the show. Hit that like button right now to tell YouTube this content matters. Comment below with your thoughts and questions. Share this with someone who needs to understand what's really happening before it's too late. And I'll see you in the next video where we're going to dive even deeper into the forces reshaping everything you thought you knew about money and wealth and the economy. The crisis is building. The pressure is mounting. The cracks are forming. And the people who recognize it now, who take it seriously, who prepare accordingly, will be the ones who thrive when everyone else is just trying to survive. Don't be caught unprepared. Don't ignore what's obvious once you see it clearly. Take action while you still can, while silver is still affordable, while there's still time to position yourself. I'll see you in the next one.